This is David Patrick, a market video update for February 27, 2019. Yes, that's a long intro, but I tell you what, if it doesn't get you pumped up, I don't know what does. We're in a 36-day uptrend, and we've had over 1,000 options, basically double, some over 600% since we launched the service back in 2013. If that doesn't excite you, I don't know what would. It's an exciting time. The market just keeps grinding higher. Yeah, we're seeing a little pullback today. We'll examine the markets in a moment. We're in a 36-day uptrend. We had 11 uptrends last year. We went all cash October last year before the market pulled back. What did it pull back? 15, 20%? And now we're up 20% off the lows. It's all about market trend in rules of engagement. That's what it's all about. So we're getting paid. We're not over-examining. We're not over-trading. We're staying fully invested in this long uptrend. We're not going to pick tops. Like I always say, stay long with your stops. Don't pick the tops. 1980 historical chart pattern comparison we're going to go over in a moment. Let's first take a glance at that 90% club. 1,005 different options that are up over 90%. Some of them doubled, tripled, quadrupled. 18 year-to-date triplers. 18 of them, 61 January, February, and March contracts up over 90% in 2019. And we've only had, if we had 7 weeks to trade, 7 weeks. What is that? 8.5 a week? It's almost 1.5 a day. 1.5 options, doubling a day off our engagement spreadsheet focus. It's unheard of. Will we continue with the same results? These type of results, there's no way we could repeat as far as having 61 in that short period of time. There's no way we're going to repeat that. But let's look real fast. Our ESFL, go back and scroll down. 105 minus, so let's call it 85. Approximately 89 stocks have engaged. I believe 3 have been stopped at a loss. And I believe there's 1, 2, 3, 4, 5, 6 that we've been unable to scale. So we have an 89% winning percentage. 89%. On top of that 90% club that we just talked about. This isn't rocket science. This is rules of engagement. It doesn't involve spending 9 hours scrolling through news or listening to CNBC or other people on Twitter or social media. It doesn't involve any of that. What it does involve is opening up an email every day, seeing what trend we're in, seeing what stocks are showing a relative strength on our ESFL, and taking them selectively if they meet your risk profile, your trading time horizon. Because I've done the math. I have our risk down, our predetermined stop. I've looked at the charts. I've scanned for historical chart pattern comparisons. And the risk reward is worth it on the ESFL setups. So you just have to decide which ones meet your risk profile, your trading time horizon. Some of them have a larger stop, 10%. Some of them have 3%. Just select the ones you like. It's real simple. Is trading easy? No. Is using the methodology, if you could train your brain like a robot and you use the methodology, there couldn't be anything easier, right? 89% win and the 90% come blowing up. You'd be just celebrating. So just real quick, train your brain like a robot. Use the methodology. It works. Okay, the historical chart pattern comparison we've been looking at, 1980 on the left, 2019 on your right. And yeah, they don't look identical, right? No historical chart pattern does. But you can see we both flagged in 1980 above the moving averages. They all were moving up. Up, that's the exact same scenario right here. We touched that 10-day moving average like I said we were going to. How many times did I say that this week? I said keep an open mind for a pullback to the 10 SMA. Now that we blew out stops above 2,800, I mean, go back and look at the Twitter post. This is precisely what I said. Once again, it's not about my predictions because I didn't predict that. I said keep an open mind for it. That's what we're looking for, right? So with that said, if I could get a pointer tool out here. That box is where we were in 1980, and this is where we are here. So will we diverge from this pattern? Now, we've had Hundreds of historical chart patterns that we've used, from stocks to indexes to whatever. They've all diverged. Some of them diverge in a few days, some a few weeks, some go 13 months. All right? So far, this pattern's lasted, what, a couple months almost. Will it diverge? I don't know. Until it diverges, it's our analog we're going to use for staying long, searching for higher prices in the market, right? So, in order to stay with this historical chart pattern comparison, we got to see price strength confirmation again. Again. Now, if that happens, it might happen late week, might happen early next week. But yes, we will have to see price strength confirmation for this historical chart pattern to see our next leg higher. And that's when we'll add even more long market risk exposure. I already have 100% on long market risk exposure. If I exercise my spiders by the weekend, I'm going to have 115% long market exposure. And yes, if we see price strength confirmation, I'm going to even have more long market risk exposure. Am I suggesting that everybody gets leverage long on margin with ETFs that are triple risk, triple long exposure? No! I've said it until I'm blue in my face that everybody has their own risk profile, trading time horizon. Do what you're comfortable with. But one thing I don't like to see is when someone is confused, and I'm here to answer questions by all means, when someone is confused on when to get out. Because how could they be confused? I mean, that's what I do all my work all day for, scanning, so I can come up with our calculated entries and our defined risk that's put on our spreadsheet every single day. So how could anybody with the service say, David, where should I get out of this? This is not looking too good. What do you think I'm going to say to that? Before you get in every single trade, you already know your stop. So that's where you get out. If you're a swing trader, you use our focus list, our engagement spreadsheet focus list. Comes out Friday evening for the weekend analysis, covers you into Monday. Then you got Tuesday, Wednesday, Thursday, and another Friday daily email update that have the ESFI on there. All the work is done for you. You know where your stop is. You know where you're getting out if you're wrong already. And that's what's so important. If you don't know, I'm here always to answer questions, but that's frustrating me because you should know. That's what I spent all my time doing, is preparing the ESFL for us so we can make money. So every trade you put on, if it's a 5-minute rules of engagement, guess what? I did 3 videos explaining how to trade 5-minute rules of engagement. Does that mean you're going to make money? No. But it should be pretty crystal clear on how you're supposed to trade 5-minute rules of engagement, right? If you get long above. Let's look at that real fast, by the way. So anyway, historical chart pattern comparisons, we need price strength confirmation, right? But let's look at the 5-minute rules of engagement. And by the way, I'm not upset. I'm excited. I want to see us advance with our knowledge of the market and the knowledge of how to use the service. And our ESFL, our historical chart pattern comparisons are our roadmaps. Our ESFL shows us where to get in and where to get out. Now, just to repeat myself again, if you're a swing trader, you already know where your stop is. You already know where you're getting out if you're wrong. The price listed on the spreadsheet focus list. If the stock hits that price, you're out of the option. Real simple. If you're a hybrid trader and you say, yeah, I'm not a swing trader, I'm not going to use the ESFL, no big deal. That's fine. You can still use the methodology. Just use the previous day's low as your stop. I have no problem with that. That's not swing trader mentality. That's not the ESFL's stop. But if you're a hybrid trader, then do that all the time. Sometimes it's advantageous to do that. You get stopped at a smaller loss. But other times, market reverses right back up, and you're like, wow, I got stopped out. I should have used the swing stop. So just decide what you are. I always say, identify your risk profile, your trading time horizon. Identify your trading time horizon. If you're someone that has the time to look at the markets all day, by all means, you can day trade, you can hybrid trade, you can swing trade. I'd suggest putting them in different accounts. But don't confuse yourself and say, oh, wow, I'm a day trader. That day trade didn't work. I'm going to be a hybrid trader today. Hybrid trader, I'm going to be. Don't flip-flop. Know your trading time horizon. Stick with it. If you're truly going to trade day trades, swing trades, hybrid trades, keep them in different accounts because they are different stops and they're different risks. So, real fast before we get into the rest of the market, because I want to make sure everything we do is crystal clear. Everything. Someone had a question about, doesn't price have to be above the 10 SMA for these 5-minute rules of engagement? Yes. And that's a great question. All questions are great. I don't want anybody to think, oh, I'm scared to ask a question. I'm here to answer, okay? But in reference to this is a great question because I think maybe when I drew the downtrend line and I put the arrows, they said, yeah, you can get long, maybe they thought you can get long there because of the break of the downtrend line. So, and I posted back on Twitter, yes, you need price above the 10 SMA for your rules to engage. The DT line, the downtrend line, is price pattern. So you got price pattern, price above it, and then you got your rules to engagement, anything above the 10 SMA. If you wait 2 bars for an uptrend, it gives you higher probability. Sometimes you miss the first 3, 4, 5, 6 handles by doing that. All depends on your risk profile. It all depends on how many bars we're in. I like to stick with trends. I've said that a long time. But early as the market opened, right at the opened, yeah, you got a break of a downtrend line. This downtrend line happened to be above the 10 SMA. And so you had your rules to engage right away, right? MACD bull cross. Made a few handles, got stopped, whatever. This break of a downtrend line, the actual downtrend line price was not above the 10 SMA. So it's actually a really good question, but I just want to clarify it so when you see it in the future, yeah, you got your price pattern. Now you got your rules to engage. Rules to engage, price above the 10 SMA, MACD heading in the right direction. MACD is, I don't know if you can see it. Let me see if I can blow. Yeah, there you go. It was sloping up this whole time. So where do you have your rules of engagement? Right there. Okay. Right there. Let's call it 2782. And we're at 2788. So you scale what? Plus 2 to 3, plus 6 to 8, or 7 to 10, whatever you want to do. I scale 3/4. I like to put on size, scale. So you had 3 nice setups. They all work. There's a short setup, right? Break of a downtrend line. No, you don't get short right there. You got to wait for right here, right? So if you get short, price below the 10 SMA after a break of a downtrend line, you get short 2787. That's 10 handles. That's a nice trade. Stopped out at entry right there. So on top of our ESFL, which we remain fully invested, I do at least. I've said that for a while. If anything, I'm going to be more long market risk exposure by the end of the week as long as we stay above 2681. What's 2681? All right, we showed the 5-minute rules of engagement. Let's look at the 2681. So a couple weeks ago was the week before February options expired. The monthly contracts expire 3rd Friday of every month, right? The week before, we often see pivotal lows formed in the market. That just happened to be right there. Thursday, Friday. I believe this is Friday. Right there. That's our pivotal low. 2681. If we would break that, I'm going all cash. I've said that before. I'll say it again. That's where I'll go all cash. Because then the market's going to get sloppier. It doesn't mean we're going to new lows. It's getting sloppier. I don't want to endure a sloppy market with a large portion of my money in the market. I want to enjoy trends, momentum. Now, momentum has stopped. We're actually seeing MACD bear cross right now. But we're held to 10 SMA, and maybe we retest it tomorrow, maybe even go lower. Maybe we test down there. Maybe we get knocked out of trend. That's fine. I would say really don't want to break here, right? I think that candle means something. So 27.29. 27.29, it gets broken. I probably would start lightening up. In 26.81, I'm going all cash. So you know what I'm doing, and you knew what I did the whole way up. So that's where we got the 26.81. That's our line in the sand. And we looked at the historical chart pattern comparison. I put this on the free Twitter 2004 account on StockTwits, and people were saying, well, that's a big range for your price projection. You know, I don't like targets because they limit. I mean, if you had price target, by the way, our first bogey, we like to call them bogeys, was right in here, 2,600. Can you imagine if that was our price target? We would have missed the whole way up, right? So I like to use bogeys, price projections, price projected ranges. I don't like the word target. Target limits your upside. But anyway, it's a pretty broad range that we could, yeah, exactly. That's what it looked like in 1980, right? You slop around this range and go higher. And that's price projected range over the next 4 or 6 weeks. 2,900, 2,800. So that's if we stay above these key levels, that's what I would lean towards, right? We never want to predict. So, sorry about that. We are 17 minutes in, and we're going to get going here. Let's see. SPX we talked about. Let's look at the comp, the NASDAQ. What's it doing? Oh, it's doing, man, exactly what the doctor ordered, right? This is awesome. You got gaps to fill up here. We talked about this, and I've posted that, right? These gaps, you see these gaps? These gaps were never filled. They're magnets above. So we have this zone that we're probably going to, go up into at some point in the next 6 weeks. I posted the other day, we now have gaps below before we can go higher. Well, we've already filled those gaps. They're filled. We touched the 200 SMA. We touched the 10 SMA. So, don't want to see us break, obviously, here. There's those pivotal lows, right? I think there's pretty good high odds we're going to hold 7,400. There are some small gaps in here that could get filled, possibly tomorrow or Friday. They don't have to. So what do we do? Well, we already know we're all in long. We already know where our stops are. Now let's say you came into the service, or maybe you just weren't all in long because your friend told you the market's going lower. What do you do? Well, you wait for price strength confirmation. Quite simple, right? What is price strength confirmation? Well, let's go over what price strength confirmation is real fast before we go to the rest of the stocks. We have a bull flag right here, right? We entered down here. We scaled. We paused for 3 days. Price strength confirmation on that day right here, which was January 15th, out of the bull flag. Another bull flag developed here. Price strength confirmation on January 31st. Consolidation right there. Price strength confirmation February 13th. Right there, consolidate. Price strength confirmation, what was that? Monday on the gap up. I don't like gap up days. I scale on those days. So I scaled on the price strength confirmation. This is how I trade. With that said, the next price strength confirmation is above Monday's highs. If we take out Monday's highs, let's call it next week, there's a very good high odds we're going to fill these gaps up here. So if you don't have enough long market risk exposure that meets your risk profile, that's what you do. You wait. You can wait. You can buy the QQQs, TQQQs. You can buy SPXL. You can buy TNA. You can buy UDOW, FAS, whatever's leading, whatever's showing relative strength. And I will post what is showing relative strength on the Twitter site. So I think 7,400 should hold. The next ad is above Monday's highs. Those highs were 2602. So we got the game plan, right? Let's look and see if anything else is telling us with any of the other indexes or commodities and things like that. Oil. Well, I've been saying now for weeks, sector rotation is extremely bullish. What do I mean by that? Well, money sometimes pours out of technology, goes into transport. Sometimes it pours out of transport, goes into small caps. Sometimes it pours out of small caps and goes into energy. Sometimes it pours out of energy, goes into financials, whatever. The sector rotation is bullish. The money's not coming out of the market. It's just going into another sector. It's hiding out in another sector, looking for relative strength. So this sector looks pretty good. Price strength confirmation, right? Pretty close on oil futures. Let's see if the XLE is looking to cooperate if oil futures see the next leg higher. Well, they tested the 10 SMA. MACD's flat. It needs above right here, 66.93. Above 66.93 gives you price strength confirmation to add. to add XLE, to add ERX, to add COP, to add PSX, to add CVX, to add ExxonMobil, to X Diamond Offshore, Marathon, Oxy, Schlumberger. We'll get to those stocks in a moment. So oil looks pretty good. Financials, yeah, that 200 SMA, it's one of the few that just can't seem to break above. So it looks fine. We're holding the 10 SMA. It really needs to break above the 200 SMA to get going. Right now, there's just no momentum. And what do I always say? I don't like to trade no momentum. I don't have the patience for no momentum. So I'm going to wait. IYT Transports led the whole way up. And guess what? That and the IWM has led this way down. That doesn't mean that this is a bearish move on the market. It means it's, guess what? Money's flowing out of transports. So money's flowing out of small caps. Here's your IWM. Actually, the IWM did hold the 10 SMA, but it's got the MACD bear cross. So, some money's coming out of there. And that's fine as long as it stays in. IBB. So I drew that black line was resistance. We gapped up, bull flag above, price strength confirmation. This is very, very, very interesting. And this is very, very, very bullish. The market got knocked out of trend. See, I drew this line. We got knocked out of 10. Was it January 3rd? I believe that's what the date was. What's the date there? January 3rd, yeah. Yeah. So guess what the IBB did when the market went below the 10 SMA? It showed relative strength. It stayed above the 10 SMA. Yeah, we saw a red candle, but who cares? MACD was heading straight up, and this was in trend. Next day, boom, boom, bang, this thing blew up. And there was a lot of stocks that paid in that sector. We were all over it. So what are we looking at right now? Yeah, showing relative strength again. Bull flagging above resistance. Price strength confirmation. MACD curling back up. This looks good. I would say this looks good all the way to 120. So let's look for some stocks in that sector in a moment. What else do we got here? Well, let's see what the UDOW is doing. UDOW looks good. Someone had posted the other day, they're adding UDOW. I have no problem with that. If you're day trading, I prefer to add on dips when we have 5-minute rules of engagement. So, like for example, the UDOW was above the 10 SMA here, so you could have got long there. You use that as your stop. We don't have Globex with UDOW, right? So you just use the intraday stop or the pivotal low there. So that worked, right? So if you're using 5-minute rules of engagement to buy a dip, I have no problem with that as long as the daily we're above the 10 SMA, which we are. So UDOW looks decent. What else do we want to look at before we look at stocks? Gold. Yeah, we talked about gold was going to slow down when it filled these gaps. Exactly what it did. So it's losing some momentum. I would stay away for a new trade. TLT bonds. Thought we could come down here. We never did. Still would like to see us come down to 118 and really shake the tree there. We'll see if that happens. All right, let's get into the stock market. So a couple of good questions. I always bring up this trader. He's a great trader. He's trading the pit and always gives me suggestions on what I'm doing right and wrong with these videos and stuff, which is great. But he had mentioned, I thought was a good question, because I had posted on Twitter, I think you could get long Apple above 175.57. He's like, well, couldn't you have got long right here? Right? Because we did break that. Yesterday I posted you could get long above there. I think that's a great question. You got to remember a couple things, right? Number one, Apple's in the 90% club because we got long, what was it, in here somewhere, right? I got to go back and look at the 90% club. And those options were up huge. And then if you remember, I day traded it aggressively. I had at least 100, maybe 200 options on contracts. And we got paid really, really, really fat on Apple right in here, all right? So this, first of all, it's just another ad, okay? Second of all, yes, you could take it, right? You're going to take it versus that low right here. So your stop, you already know where your stop is, that low right there, which is 168.42. So if you took it, you certainly haven't been able to scale. You haven't been stopped either, right? The other way to trade it is use the ESFL today, right? I didn't love this trade because the market was showing, it was getting a little shaky. And got to remember, that was a gap up day. That's a gap up Monday. I don't like gap up days anyway. Okay, but that's just me. But yes, you had rules to engage there, price strength confirmation. But the other way to take this is this is a bull flag. So, or elongated bull flag. So, and we talked about this numerous times, and we've had plenty of setups with this. But you just enjoy your fibs, right? That was the high, and this was the recent low. So, obviously, we had all these opportunities to get long back in here. So, you got paid fat. We allowed the stock to rest, right? And we knew we could add above there. But another way to trade the bull flag, in this case an elongated bull flag, is to use your Fibonacci's, right? 61.8, that high to this low. So yeah, you would have got long here or here, and you wouldn't have made money right away until this gap up Monday, and you'd be scaling, right? Obviously, you'd be scaling profits. So these are not all day trades, but that's another way to trade it, above the 61.8. And we've had, go back and look at historical chart pattern comparisons. There should be a bunch on there where we use the 61.8 fib on bull flags. I like using that more on bull flag breakouts, but you really can use them on any bull flag. So that was a great question, and I'm trying to answer all questions here. Why is that not blowing up here? All right, so there's Apple. And yeah, Apple might take a few more days, and we know where to get in and use the ESFL. So let's go to the next stock here, Amazon. So I forgot to mention this. The market has been going up without FANG stocks. I mean, we're breaking out to 36-day uptrend highs as of Monday without FANG. Can you imagine if FANG wakes back up where this market could be? If FANG doesn't have to wake back up, we could lead with energy, we could lead with financials, we could lead with transports, we could lead with small caps, we could lead with industrials. We don't have to lead with FANG. By all means, the NASDAQ could go higher without FANG. I was just saying, imagine if the FANG stocks were hot, where this market could be. Amazon showing us nothing, part of the FANG group, right? Showing us nothing. So Apple looks decent. It's flat MACD on Apple, so it's not a high momentum trade. Getting back to Apple, see how the angle of this MACD and the momentum, that's really when you make your money, and we got paid huge. Another reason why this stock hasn't really paid much lately is look at the MACD. So if you want all the stars aligned, you want the highest probability trades. You want the ones that are breaking out the new highs or bull flagging with MACD confirmation at new highs with price or heading up at a good angle. That'll give you even higher probability trades. Okay, sorry, we're 28 minutes. I'm going to have to fly so I don't make this video too long. Netflix, grinding without MACD. It's bearish divergence. It's not a reason to short. It's just a reason to say, hey, for a new position in Netflix, it's tough until we see momentum come back in the name. All right, booking. Doing nothing. Expedia. Doing nothing. Very sloppy. I don't see a new trade there. Tesla. Interesting. It's a huge sloppy trading range. I personally, there's too many other stocks to trade. Roku. Bull flag, bull flag, bull flag, bull flag. It looks like it wants new highs. Now, is risk reward worth it up here? Probably not, right? But it's a bull flag, and it's way beyond the, if we drew fibs, let's draw the real fibs. I don't have them up. If you go from here down to there, wow, $26. Yeah, you're above the 61.8, and there's going to be a full, I would say, in my estimated or educated opinion, I think we go to a full retrace back to new highs. Within the next 6 weeks. I can't give a time frame of a few days at that one. Okay, NVIDIA. What's NVIDIA doing? Nothing. Don't like it. Wow, some of these big leaders. Intel I like a lot. Some of the dinosaur stocks. Cisco, love it. Love Cisco here. I think it looks phenomenal. Cree looks phenomenal. And see, this is exciting stuff. These new leaders. I love when we see new leaders. We saw new leaders a few weeks back. We'll get to those with... what was it? Vive, now, Coop, some of these other ones. What was it? VMW, eBay, Panwa, Cyber, Xilinx. I mean, and we're seeing now new leaders. Some of the new leaders are old dinosaurs like Cisco and let's see what's Microsoft doing. That still looks pretty good. Let's see, Texas Instruments, not so much. AMD, Micron, lagging. So the sector as a whole, Soxel, yeah, has given some back. So money is pouring, it looks like, out of the chips. So I think Intel looks good, but I'd rather be in Cisco or Cree than that. Let's see, Light, OLED had a nice, that's a nice bull flag. I mean, that's another stock. I mean, OLED looks good. Roku looks really good. Apple looks decent. So that's 3 that look pretty good. Let's go back to the Xilinx, which we got paid on fat. This is huge. This is a huge reversal. And yes, I think you could use a Fibonacci from there to there, get long or above this candle and new highs. Anywhere in there, we've just nailed this one. And I still think the stock goes to 130, and I don't even think that's where it stops. I think it go to 140 and even higher. Xilinx, to me, continues to look great. And nice reversal. All right, exactly where you want it. Just with a doctor order with Xilinx. Okay, so Facebook, what's that doing? Absolutely nothing. Google, absolutely nothing. So FANG is asleep at the wheel while the rest of the market is just in ripfest. Microsoft, we said, looks good. Oracle, grinding, losing a little bit of momentum. Adobe, lost momentum. Coop, lost momentum. Now, there's no momentum, but that still looks like it wants new highs. CRM looks really good. Workday, I think CRM might have earnings, though. Workday looks good. MACD's starting to slope up a little bit. Jobs, not so much. FFIV. Team, no momentum. SQ, momentum's curling up. SQ could be leading soon. That's, I think some momentum's building up there. This is a bull flag with MACD at new 52-week high. You see this gap right back in here in June? $200. I think Baba goes to 200. That looks really good. Let's see rest of China. Baidu, no. YY, NTES, no. I don't like any of those names. Those don't look good to me. Let's go Shop. Shop looks good. Momo looks okay. Box looks good. GoDaddy, Wix, PayPal. PayPal wants new highs and then some. I think that's the 7th stock that I like for relative strength. JP Morgan, sleepy. The banks. Bank of America looks okay. Goldman Sachs, BLK. Yeah, I think Bank of America probably looks the best out of all of them. Let's go to these old leaders. Vive's starting to break down a little bit. What about eBay? eBay still looks good. Hard to put new money there. Panwa, a bull flag, and that might be setting up to add. CYBR. Yes, I own that because what was it? A bull flag breakout. Use the 61.8 and then the bull flag price strength confirmation and our number 1 trading setup paid you again. I'm long cyber. I'm staying long versus my stop. Still looks good. Flip to energy. COP. PSX. Do I see anything? PSX look all right. Sleepy. CVX. Oxy. Yeah, I mean, I don't see anything I love. They're grinding sideways. Yeah, I don't. I'm probably not going to put money in that sector. I already got some money in ERX. So those 9 stocks I'd mentioned before, I'd be more interested than that. CME, it's a bullish consolidation above a 200 SMA until it isn't. ICE, that looks interesting, but I think it's going to pause this gap fill. But it could be setting up long. CBOE, boy, that stock just looks horrible. All right, let's look to the biotech sector. Amgen could lead. We'll wait and see. Gilead reversing back up. Jazz, very nice on Jazz. I like that one a lot. Oh, come on. ALXN. There we go. That looks very good. That one looks like it wants new highs. I like that one. Vertex, MACD Bull Cross. I like that one. REGN. I think that wants new highs. I like that one. ISRG. I do like it, but its momentum slowing down. Aluminum looks okay. So about 3 stocks in that sector I like a lot. Miscellaneous. WWW. No. CMG. Just pausing. Really hasn't paid from our last entry. UBNT. 90% club. And then what's our number 1 trade? Bull flag to new highs. You can use the 61.8 or the price strength confirmation. Yahtzee. That thing is just a rocket ship. In fact, I think somebody posted a rocket ship when we first engaged. I don't remember who that was, but let's see. Twillo. MACD Bull Cross. I think that's another leader. That's at least 10 stocks we've identified that look like the money could continue to pour into. And we're 35 minutes deep in this video. I don't make it too much longer. So, in summary, If you have questions, ask them. So I want the questions to be based on the methodology. If you don't understand it, by all means, shoot me an email. But I'm frustrated myself that I haven't made things crystal clear enough on use the SFL. Every single trade, if you're a swing trader, you have your entry and you have your defined risk. So I'm going to have to continue to pound the table on that so I don't get that question, because that's a question that we should already know. Where do we get out? The stock is not working. Where do I get? You already knew. If you're allocating 5% to JP Morgan, you already know where your stop is. Move on to the next trade. There should never, ever be a question on where do I get out, because that part is crystal clear. All right. So we identified 36 plus day uptrend. We identified lines in the sand where we don't want to see the market break, where the projected price range could be, where we are with the historical chart pattern comparison. That's all I got for the market video update. Have a great day.